What is going on, guys? It is James Lee here from Celestin Capital. Welcome to today's video. I hope you all had a great week of trading. For me personally, it hasn't been the best of weeks. And the important thing about trading is that we go back and we review what we could have done better, right? Because we all have those weeks or potentially even months where it seems like no trade goes our way. And the important thing is during those times of losing or of lessons, that we go back and see what we could have done better, right? Because every system, every strategy that someone trades always has refinements that could be done to make it better. And that's what I'm going to do here. I'm going to backtest GU for you guys, or GBPUSD, just to see what I could have done better over the past week. Now we're going to go ahead and minimize this so there's no cheating. And we are going to date back to the week started on the 14th, but I don't trade on Sunday, so we're going to go back to the 15th, between the 14th and 15th. So we're going to look for the 15/14th, which is about right here. All right, so here we go. And again, I hope this gives you guys some insight into how I trade, and not only just how I trade, but what you yourself could do better, whether it's your entry points, whether it's your POIs, and just understanding and cultivating your own system so that you can trade the financial markets. Because I am not a financial advisor, so don't take any advice from me. This is personally based on my experience in trading the financial markets. So let's go ahead and hop into this video. Now let's take a look at structure. Let's see what structure is doing right now. Right now, structure is, as you can see, structure is bearish, creating lower lows, lower highs. We're liquidating lower lows, and for me, we are going to be bearish up until around this point over here, this demand zone right here. We're going to be bearish up until this point, so I'm expecting price to continue making lower lows and lower highs up until this point, and we could potentially be bullish from this point. So again, we're looking for bearishness, but that does not mean that we cannot catch the moves up, because as you can see here, we are bearish and then we are bullish. So in between this pullback, there's a lot of moves that we ourselves could capitalize on to the upside, rather than just waiting for the next high to be made and for us to take it down. We could actually ride the move up and then sell it at supply zones. Ride the move up from demand zones and sell it at supply zones. So let's jump into, or let's scale down to a lower time frame. Right now, we can see that price has just broken structure to the upside, which happened right over here. It's a nice impulsive break. We can see from this candle right here. So what we're going to do is I'm going to look for longs up until this area right here, up until this supply zone right here. So I'm going to look for bullishness up until the supply zone. Once we get to the supply zone, I'm going to look for bearishness. Let's go ahead and scale down to a lower time frame. We've just broken structure. And as you can see, this is the fractal structure that we have right now. This is the structure that we have. And then this was the last down move that broke structure to the upside. So this last wick right here that liquidated this low right here was the last down move before the up move. So what we're going to do, we're going to target this low as, or excuse me, this last down move as our POI. So we're going to expect price to come down in here. And once price, or if price gets down here, we're going to look for shifts of microstructure. So it breaks the structure to the upside to continue long. And then we're going to get in on demand zones and ride it up to the upside. So that's what we're going to look for. So let's hop down to a lower time frame. Once price gets in here, we're going to look for shifts of microstructure. So break, not yet. Okay, so we've tapped into this POI. Okay, so this was a nice break already. As you can see, we have this break to the upside right here, but I want to see more of an impulsive break. Let's see if we get that impulsive break. Okay, so that looks a lot better. That impulsive break looks a lot better. So what we're going to do is we're going to target this last down move within our point of interest. We're expecting it to liquidate these equal lows right here. We're going to expect it to liquidate. As you can see, we have equal lows right here. So we're going to get in on the liquidation of these equal lows. Liquidity low. So we're going to place an order, a long order right under here. And we're going to take this to the upside around this structure point right here. We're expected to break the structure because, again, we're bullish on this time frame, or price is currently bullish up until this supply zone. At least that's what I see. You can see we're breaking structure to the upside, and I'm expecting it to continue to break structure to the upside. So we're going to head back down, and we're going to expect price to tap us in before continuing long. Oh, let's see if price comes back down. Okay, so price actually liquidated us out of the market. So now we have a minus 0.5. Each trade we're risking 0.5%. So it's not a big deal for us because our losers are so small that all we need is one winner to cover these losers. As you can see, we're risking 0.5%, but when we win, we're potentially making 3-4%. So we're able to lose one trade and win one trade, and that one trade is going to make up for the losers and then some. So we're going to look for a break of this structure high before looking for longs again. Our zone has not been invalidated yet, so we're going to look for a break structure of this high. We'll let price play out. Not yet. Okay, so this was a pretty nice break. So what we want to do is potentially target, let's see what we got here. Okay, we have nothing yet that I see. I want to look for a nice demand zone that price may retrace back to. Okay, as you can see here, we have this imbalance right here. Not only that, we have this last down move that broke structure to the upside. This last down move that broke structure to the upside. So what we're going to do, we're going to target this demand zone right here and take it to the upside. So we're going to place another order for a long right over here. This is about, I'm going to give it some breathing room just to account for spread. 6 pip stop loss. So this is going to be a 1 to 4 if target hits our, or if price hits our target. So we're expecting to tap in. Okay, so we had a huge impulsive push to the upside. So now this zone has been invalidated because we've created another down move right here and then a break of structure to the upside. So this zone right here is no longer good for me. Let's go ahead and see what we've got. Let's take these out. So now, as you can see, this right here was our last down move. And again, we have an imbalance that we're expecting price to fill in. That doesn't mean price has to fill it in. We're just expecting price to fill it in. This imbalance. So we're going to take this last down move right here as our point of interest. Expecting price to come back and mitigate some orders that are left inside this last down move. So we're going to do something like this. We're going to target the next high, which is our liquidity point since price is currently bullish. So we're expecting to tap in. Okay, price tapped us in. Now let's see what we have with microstructure. No, the nearest high is right over here. So if anything, we're going to wait to go break even. Okay, as you can see, targets were hit. Now, this was a 1 to 3. So we're going to go ahead, and we're risking 0.5%. So it's not actually 3%. It's going to be half of 3%, which is 1.5%. So this is plus 1.5% on this right here. So again, the reason I took this trade was because of this imbalance and this last down move before the up move. As you can see right here, this imbalance, which is this orange zone, and this last down move before the impulsive push up that broke structure to the upside over here. Broke these highs over here. So we're going to continue with our session, and we're going to see what price gives us. Again, we're not trying to predict price, but we're reacting to what price does. Okay, so we've come back into the zone, but we've already hit our targets. Maybe come in mitigate more orders. Let's see what happens. Okay, so we have another impulsive push. We can potentially target this, but I want to see more of a break to the upside. Yeah, that didn't look too good. Let's let price play out. Okay, so we have a push once again. There we go. That looks a lot better. So let's see what we've got here. Again, we have a slight imbalance right here. That we can potentially target. But as you can see here, we have equal lows. So I'm not going to take this last down move as our last down move, but I'm going to take the liquidation of these lows, which is around here, which we have another imbalance down here. I'm actually going to move this right here. We have another imbalance plus these equal lows. So I'm expecting price to take out these equal lows and then continue to the upside. I'm expecting liquidation, shift of microstructure, continuation to the upside. So we're going to mark this as our last down move before the up move. We're actually going to get in a liquidation of these equal lows. We're going to target the next potential high. So we've got here, let's target this high right here. So let's see if price taps us in, comes down to liquidate these lows and taps us in. Nope. Okay, so again, we're still bullish up until price gets to this zone right here. Still bullish. Once we get into the zone, we're looking for bearishness. So we're still bullish. See if price comes down, liquidate these lows. Okay, so we've been tapped into the trade. As you can see, we've liquidated the lows as well as filled in this imbalance. Let's see if price continues to the upside. So once price, we can see this high right here. Once price gets above this high, we're going to break even and we're going to partial 50% of our trade. Break even, partial. If price continues up, we're going to break even and partial over here. Nope, not yet. Okay, so not only was our TP hit, but we were able, or not only were we able to go break even and partial, but our TP was hit. So before our TP was hit, we actually broke even, and I'm going to be fair on this. So we targeted this high over here, but let's see right here. So right here was a 1-to-1, so this is actually plus 0.5%. 0.5%. And then we have another, we targeted right over here. We have another 1-to-3. So this, let's see, let's take our calculator out. Calculator. So 3.87 divided by 2. 3.87, 3.87 divided by 2. This is a 1.9%. So this is another 1.9% because this full trade right here wasn't actually 3.87 because we risked 0.5%. If you risked 1%, this would have been 3.87%. But because we risked 0.5%, we have to take half of it. So 3.87 divided by 2 is 1.937. So we have another plus 1.937%. All right, so in total, this is about 2.some%. So let's continue and see what happens. Wow, this was a huge impulsive move to the upside. Let's continue and see what price does. All right, so price came back down. We're breaking structure to the upside potentially. We're gonna wait for a break of structure of this high before getting in for longs. Again, my bias is that we're still bullish. Okay, so now what we can do is let's actually go on a higher time frame and see what's going on. All right. So as you can see, we've broken structure to the upside. Now we're going to use this last down move right here. And we're expecting a shift of microstructure within this POI. So we're going to see what price gives us. If price returns to the area, we're going to see what price does once it gets back down to this area. All right, so we've tapped into the zone. And we can see price breaks this, we're going to look to get into a position. Let's see if price breaks above that. All right, so we've broken microstructure. We've broken this high right here. We're continuing to break highs. Let's see if price continues to the upside. Okay, so that's nice. So we can use this as our last down move. Oops. Let's give it some breathing room, account for spread again. And our target is going to be, once again, the next high. So if this plays out, potential 1 to 11 if we hold it, or 1 to 5.5 because again we're risking 0.5%. So we haven't been tapped in yet. Waiting. Okay, we've been tapped in. Once price breaks this, we're going to partial and break even and let it ride. Let the rest of our trade ride. Okay, so we've partialed and we've broken even. So we're at break even right now. If price comes back down here, then we've been taken out of the trade. Ooh. Yikes. We're stopped at our break even, guys. Even though price continued our way, we got stopped out our break even. We're able to partial over here though. So as you can see, we're able to partial at 1 to, what is this? Actually, I have to do this. We're able to partial at 1 to 3. So this is actually plus 1.5% before getting stopped out. So we're going to do plus 1.5%. This would have been a nice trade. But again, that's how I like to manage my trade, guys. Because I don't want price to go all the way up and then come back down just to liquidate me out before continuing in my direction. Because price could have easily tapped me in, gave me a little bit of mitigation, and continued to the downside. That is not what I want. I want to be able to break even and take some profits from the market rather than let price continue to the upside, get close to my target, and then liquidate me out. So I'm fine with this trade even though it continued to our 1 to 11. So again, we're letting price right out, see what happens. Seeing what happens. Okay. We've got a huge imbalance right here. Expecting price to come back down. Okay. So as you can see, we're close to our supply zone. If price doesn't tap into our supply zone before getting into this area, we're going to look for one more long position down here. This last down move before the up move. Expecting price to come back down here. Hopefully it comes back down. Okay, price tapped into our supply zone, so this zone is no longer valid. All right, so I want to look for one more break to the upside, and then actually I want to look for something like this. I want to look for price to create structure, break a structure of this low, and now get in on the mitigation of this supply zone right here. Look for something like that. Let's see if price continues up. Okay, so we're continuing up. I want to see a break of structure potentially. See a break of this low right here. Price breaks this low, we're going to get in on the mitigation of the supply zone. BOS down. So let's see what price does. We're going to look for shorts once price breaks. Okay. No, not a good enough break. Not an impulsive break for me. So not yet. No shorts yet. Okay, so this is a nice break. So now we want to look for shorts. I potentially want to look for shorts on the fill of this imbalance right here. So we're going to use this last down move right here as our POI. So we're going to look for shorts right over here. I want to take it down to, let's see, this last low right here. So this is a potential 1 to 8, but again, we're going to partial along the way, so we may not get the full 1 to 8. Looking for price to come back up, tap us in. Oh, okay. So actually, price liquidate us out, so minus 0.5%. And that's fine. We're going to have those days. We're going to have those moments. But again, remember the trades we had before. Our wins are way bigger than our losses. So this loss means nothing to us. Okay, so this was a huge impulsive move down. So we're actually going to look for mitigation of somewhere around here. So let's see what price does if it comes back up. We're going to look for a shift of microstructure once it gets up here. Let's see. Has it gotten in yet? Okay, so this is real time. This is where the market closed on the 19th. So guys, this is the end of the backtesting session. Let's go ahead and tally up our trades. Let's see what we have for the week overall on this backtesting session. So let's take out our calculator. Let's go. Let's minimize this. Way too big. So we have a minus 0.5 plus 1.5. So this right here is a plus 1. 1.5 minus 0.5 is a plus 1. So 1 plus 0.5, that's 1.5. 1.5 plus 1.937, so we have 1.5 plus 1.937 equals 3.437% so far. All right, so let's include this 1.5 plus 1.5, 4.937, about 5% so far. and we're going to include this minus 0.5%. 0.5. Okay, so for the week, we're up 4.437%, which is not bad at all. On average, a great month is 10%. So getting this in 1 week is extremely good. We're already above the average. So as you can see, this is how I like to manage my trades. This is how I like to backtest my trades as well. And I like to look at the things that I could have done better, potentially better entries, because my bias was right that we were bullish up until this point. But it's the fact that I entered at the wrong time. As you can see, we got liquidated here. Our POI was right, but we got liquidated by 8 pips. This one, we got liquidated at break even though it ran to our targets. So actually, this one was where we got liquidated at break even though it ran to our targets, which would have been a plus 5 point some percent rather than just a plus 1%. So as you can see, that's how I like to manage my trades. This is how I backtest, and hopefully this gave you guys some insight into how you might be able to implement backtests, implement things into your backtests, and potentially take some things from this video and implement that into your system. I hope you guys enjoyed the video. If you did, be sure to hit the like button. And if you want to stay tuned for more content, because we've got some fire coming out pretty soon, be sure to subscribe and turn your post notifications on, because again, we've got some bangers coming soon. Wishing you guys a great trading week next week, and be sure to kill the markets, guys. Let's get it. Peace out.